Everyone, welcome to another video. So in this video, we'll try and understand the major fiasco which happened at Indusind Bank some 2-3 months back and why corporate governance as a whole took a major hit for this particular bank. Now, Indusind Bank is the country's 5th largest bank, and this bank on one particular fine day of 10th of March 2025 came out with a public announcement stating that there's been a fall of its net worth by around 2.35%, an erosion, which is approximately a fall of 2,100 crores. And after this public announcement was made, the share price of Indusind Bank fell by around 27%, which is the biggest fall in a particular day for 2-3 decades in the country. Now, this obviously came of a big surprise to the public as well as the board of directors, because of which they appointed Thornton, which is the leading consulting audit firm, to conduct a forensic audit of Indusind Bank and to submit a report in some months' time. So Thornton or GT did their job, and in their forensic audit report, there were 2 significant alarming findings which we will discuss in depth in this particular video. The first finding was that there were accounting discrepancies in the internal derivatives portfolio of Indusind Bank. Now, derivatives is kind of an instrument that the bank enters within themselves or with other banks to hedge or manage the risk for many situations. Let's say there's a foreign currency situation or risk that is appearing, where Indusind Bank is wanting to borrow so many dollars from JP Morgan and Chase in the US. And at the time of borrowing, $1 is equal to rupees 85. Now, 6 months down the line, when they are made to repay back that amount of dollar loan that is borrowed, at the time of repayment, $1 becomes rupees 90. And therefore, it is very evident that Indusind Bank has suffered a direct loss of rupees 5 for every dollar at the time when they make the repayment. Now, to hedge or manage this foreign exchange currency risk, Indusind Bank will enter into contracts, into derivatives to manage the risk, to hedge the risk, and to sustain the loss at rupees 85. They will enter into a contract stating that whatever happens tomorrow, day after, 6 months down the line, when I borrow, when I repay, the value of $1 should definitely be 85. It cannot be 90, 95, 100. So they are not encountering an unlimited loss. They are encountering a limited loss at rupees 85. Or whatever they enter into the contract, they are saying that at this particular price only I will be able to repay. And because of this, they are able to hedge the loss, manage the loss, and not encounter any unlimited loss. And that is the main purpose of banks or other institutions entering into derivative contracts. Now, at Indusind Bank, there were 2 kinds of trades. There were external trades as well as internal trades. Now, external trades are basically derivatives or contracts that the bank enters into with third parties or outside banks. Whereas internal trades are basically trades entered into by the banks within themselves or within the different desks at the bank or departments at the bank. As far as accounting is concerned, for external trades, the accounting takes place on market-to-market basis or MTM basis or daily basis, wherein whatever is the gain or loss in that particular day from the derivative contract transaction, you will have to immediately recognize in the statement of profit and loss. You cannot defer it. It is on a daily basis recording that takes place and immediately recognized or shifted to the PL statement. But in contrast, internal trades on the other hand follows the accrual concept, wherein the gains and losses are not immediately recorded in the profit and loss statement. Rather, they are kept and reserved in the balance sheet, maybe as receivables or intangibles, and later brought about in the profit and loss statement. So there's a lot of deferring of profit that happens as far as internal trades are concerned, and it is quite different from external trades. Now, what happened was RBI, Reserve Bank of India, on sometime during September 2023, brought about a guideline regulation directive stating that there cannot be any more delay of losses. Accounting should take place like how it is taking place for external trades on market to market on real-time basis, where the gains and losses are immediately recognized in the profit and loss statement. There cannot be any deferment or delay of losses. Now, this regulation was brought about and they gave an effective date of 1st April 2025 to basically implement this particular directive. But what happened at Indusind Bank is that even though RBI said that 1st April 24 is the effective date for this particular change in accounting that takes place and no more internal trade accounting, Indusind Bank sort of ignored this particular guideline and went about accounting for internal trades for the entire financial year 24-25, to be precise up to March 2025, for around 11 months. Even after the guideline was brought about, they continued their normal method of accounting as they would do for internal trades. That's deferment of losses on accrual basis, not immediately recognizing the statement of profit and loss. This was the first alarming finding and a mistake that Indusind Bank did. The second grave finding in the GT's Forensic Audit Report was the question leading to insider trading. Now, what exactly is insider trading? In simple words, if you are an employee of a particular company and you know that the company in a couple of days will bring about a bad announcement, or there'll be some person announcing something that something as bad has happened in the company, you knowing the fact that this announcement will come in a couple of days, you are telling your friend or you yourself are going to offload or sell a lot of shares of the company that you were holding before, because you know that the share price of the company will fall down in 2 days time because of this bad announcement that will be taking place or that will be done by the company. And that exactly is insider trading, where you know or you have first-hand information of what the company will do in the future, and therefore you're acting or you're taking a trade in terms of selling the shares or buying the shares, whatever, depending upon how you anticipate the share price to be. So what happened at Indusind Bank was that the MD and CEO, which is basically one person, together with the deputy CEO, offloaded a lot of shares, sold a lot of Indusind Bank shares, probably 1 lakh plus shares, 1,50,000 plus shares, during the period of 24-25, when they knew this particular accounting discrepancy was taking place. They offloaded in bulk a lot of Indusind Bank shares, which basically points out to the question of inside trading, whether they knew that this particular mistake was there and the bank will one fine day do a public announcement. Therefore, they preserved or they protected their position by offloading a lot of Indusind Bank shares. So this was the second major finding of the Forensic Audit Report. Now, these two alarming findings are not just the missteps undertaken by one particular bank. Rather, it is a major fall or major question mark on India's corporate landscape, wherein the governance practices are not only on paper, but in practical life, it is not being implemented in the current Indian landscape. Now, corporate governance took a major hit at Indusind Bank because, number one, there was inconsistent accounting rules being followed even after the RBI directive was being implemented, number one. Number two, there was delay in announcing bad news. Even though September 2023, the directive came about, for the entire 11 months, Indusind Bank sort of ignored this directive, delayed the bad news and only on March 10th, 2025, they made a public announcement that they made a mistake. Number three is oversight. This went undetected for the internal auditors, for the stat auditors, and even for the audit committee, which is a big question mark. And finally, you have the path leading to inside trading, which is a major hit as far as corporate governance is concerned, which was a serious failure at Indusind Bank, and still the investigations are going on. Well, I hope I was able to make things clear through this particular video. If you like the video, you could show your support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.